People made a killing this week by investing in airline stocks, and suckers were left on the sidelines and all they had in their accounts was Boeing and the Jets ETF. No, I also had 1% of my Roth IRA in Delta, so...
Just saying.
In this video, we're talking about why airlines decided to rally this past week, why I personally would not touch the airline industry for a long-term investment, short-term's a little bit different, what I think needs to happen for airlines to fully recover, and lastly, if I was forced to choose one, hands tied, had to pick an airline stock for a long-term investment, I'll explain which one that is. Let's do it. What's going on, everybody? My name is Matthew, and today we're talking all things airlines. When I was writing the script for this video, I really didn't see a point in picking a single airline stock for a short-term play because I honestly would not be surprised if I already missed what will probably go down in history as the airline rally. To be quite honest, this past week, the skill required to make money from airline stocks was pretty much equivalent to the hand-eye coordination required to shoot fish in a barrel. So again, this video is not about which stock I think will get you the most gains in the next 2 weeks, because this is a long-term investing channel. So now that we've got that out of the way, here's what the format of this video is going to be. First, we're going to talk about why airlines decided to rally this week. Second, two very crucial, very important, fundamental reasons why I'm not going to buy airlines for the long term, most likely. Third, what I think needs to happen for airlines to fully recover. And finally, fourth, which airline stock I would buy for the long term if my life depended on it. Let's cut to the chase with why airline stocks went up.
Yo, you wanna see some real speed? I'll show you some real speed.
Let's quickly cover 3 reasons why airlines rallied so hard this week. First is returning travel demand. At one point, airline travel demand actually fell by more than 95% year over year during this pandemic, and all airline revenue basically said, "Psych!" But if we look at the number of passengers passing through TSA airport security every day, we can see the return of travel demand. So this is the TSA checkpoint travel numbers for both 2020 and 2019. This column right here is 2020 numbers, and this column is 2019 numbers. This gives us an awesome comparison of what travel usually or used to look like versus now. After a quick look around, the lowest number of passengers in a single day that I could find was April 14th with 87,500 total passengers compared to 2.2 million passengers on that same day in 2019. Not only is this a 96% decrease from the same day a year ago, but to give you some perspective, 87,000 people could easily fit inside the NFL's MetLife Stadium. So pretty much every single person in the United States who flew on April 14th can fit inside one NFL stadium, and it wouldn't even be close to full. But since then, we have seen a steady increase in the number of daily passengers going through TSA, culminating to 2 days ago, which was the highest number of total passengers through TSA since all the way back in March 22nd. So I guess you could say we've begun to see a return in travel demand, but do keep in mind that the highest number we have seen in the last 2 to 3 months is still 85% below that same day from a year ago. Nonetheless, this recovery of airline passengers played a big part in the airline rally. Real quick, guys, if you want to see my Roth IRA $11,000 portfolio, the second biggest of my 3 accounts, completely revealed, all the stocks I own in there, then make sure to subscribe because that video is coming next. All right, keep watching this one. The second reason why I think we had a huge rally last week is because since reopening the economy, we have not seen as big of a spike as many people anticipated in new cases. And yes, there has actually been a bit of an uptrend in the last couple of weeks, and obviously that is not good. But overall, I think analysts are actually seeing this as a good thing. And on top of that, President Trump basically pledged that the US will not close the economy again, even if there's a second wave of the Roni-Ronas. My third and final reason for why airlines rallied this week is the fact that airlines are increasing the volume of their scheduled flights. For example, American Airlines plans to fly 55% of its entire domestic schedule in July, which is a big improvement compared to May, where they only flew 20% of their domestic schedule. And I feel like this one's a little self-explanatory as to why it would make airline stocks rise. But not all airlines are increasing at the same pace as American. For example, United is only ramping up to 25% of its July schedule. But guys, hold on.
What are we doing here?
I feel like everyone's so caught up in this rally and they're all making so much money that they're completely ignoring the fundamentals and the fact that the most likely outcome for 2020 is that we will see a major airline go bankrupt.
It could be the one you're invested in.
But don't take my word for it, just ask Boeing CEO David Calhoun. That's exactly what NBC did when they asked him whether or not a major US carrier would go out of business. Calhoun quickly and strongly responded saying, yes, most likely. Let's dive into this. This is why I'm here, just a friendly reminder for you guys not to lose sight of the fundamentals. In this video, we're going to talk specifically about Delta, United, American, and Southwest, and right now, we're going to talk about the two fundamental reasons why it's very likely we'll see at least one of them go under this year. And I'm sorry to everyone who wanted to hear about Spirit Airlines as well. I know a lot of you did, but try and watch what I do here with these 4 airlines and see if you can apply it to your research while you're looking into Spirit Airlines. First, we need to talk about something called the break-even load factor. This is our first fundamental issue with airlines right now. The break-even load factor is just the percentage of seats that it needs to sell on a given flight in order to cover its costs. In other words, the BLF is how full a plane needs to be in order to make back its money or break even on running a flight. These are the approximate break-even load factors for the 4 major airlines we're talking about in this video. As you can see, American, which had one of the highest percentage rallies this week, has the highest break-even load factor, and that is not good, guys. That means they need more passengers on every flight to break even. Southwest, on the other hand, which didn't really have that huge of a rally, has the lowest BLF of the group. I honestly couldn't tell you why the airline with the worst margins had the best rally and why the airline with the best margins had the worst rally. My guess is that the one with the worst margins, American, was beaten down more initially than Southwest, the one with the better margins. Because then that means American has more of their stock price to recover and therefore a bigger rally. But look at this. This is a chart for how full the average flight was from January to April of 2020. Obviously, the airline industry is very international, but let's take a look at North America, for example. North America only saw 25% capacity in April. Even at 50% capacity, American Airlines loses $12,000 per flight. On top of that, airlines have been slashing their ticket prices, which probably only makes their break-even load factor even higher because they're generating less revenue per passenger. Some domestic flights were going for as little as $16 per ticket. And I'm sorry for my aggressive tone right now, but
what?
Now, we didn't have statistics for capacity for the month of May, which we know from the TSA numbers has actually been increasing. But has it increased enough to reach 70% capacity? Not by a long shot. 70% capacity is more in the millions of daily passengers through TSA security, not in the hundreds of thousands where it is right now. I personally think it's going to be a very long time before we see a recovery of ticket prices and a return to 80 or 90% capacity on every flight. And in that very long period of time, you know what airlines are going to be doing? What? Tell me. Paying a lot of interest on their debt. The second fundamental problem with airlines right now is that not enough people smashed that like button. So if you want to keep this rally going and keep those 20% daily gains for your airline stocks, make sure you hit that little thumbs up. All seriousness though, these videos do take a long time to research, record, and edit, so I'd really appreciate just clicking that little like button. Thank you so much. So the actual second fundamental problem with airlines right now is the debt and the amount of interest they're going to be paying. Now, we always want to use metrics so we can compare things. So what we're going to use for this is something called the EBITDA to interest coverage ratio. Now, don't get overwhelmed. I'm going to try and explain this to the best of my ability. Basically, this ratio tells us how prepared a company is to pay off the interest expense from all of their debt. And these airlines have a mountain of debt. Let me tell you, I'm talking tens of billions of dollars worth. The EBITDA to interest ratio is calculated by doing EBITDA over interest expense. Stay with me here, guys. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. But to keep things simple, just think of EBITDA as a measure of profitability for these airlines. Ignore the taxes and amortization stuff for now, just think of this as their earnings. The interest expense is simply the amount of interest they have to pay on their debt for that year or quarter. For the most part, you want this ratio to be higher and definitely above 1 because that means they have enough earnings to pay off their interest expenses. But a ratio of 1 is not ideal because that means they would have to dedicate all of their earnings to pay off their interest and they don't have anything left over to spend on anything else. I'm going to lean on my man Joseph Hogue for this next graphic. He did a lot of research on this as well, and he's actually part of the reason why I wanted to make this video. He's a great channel if you're into long-term investing, so definitely go check him out. So here are the projected EBITDA to interest coverage ratios for American, Delta, United, and Southwest. And again, thank you, Joseph, for this data. And just to reiterate here, guys, ideally you want this number to be higher than 1 and higher in general, because the higher it is, the easier it is for you to pay off your interest. And as you can see, American has the worst ratio of 2.38, which means that their projected earnings can only cover their interest expense 2.38 times over. And again, just to really drill in this concept, you might be thinking, well,
Matthew, it's over 1, so that means that they can pay off their interest and they're scot-free, right?
well, not necessarily, because if the ratio is 1 or close to 1, maybe lower in the 2s, that means they're dedicating a significant portion of their earnings to their interest expense, and they have a limited amount of earnings to spend elsewhere in the company. Southwest is leading the pack once again with 11.45 for their ratio, meaning they would be earning enough money to pay off their interest 11.45 times. And I'm guessing that has to do with them having the lowest break-even load factor, but more of it has to do with the fact that Southwest only has $6 billion in debt compared to the other guys who have well over $20 or even $30 billion in debt. And just as a side note, I feel like I'm picking on American Airlines at this point, but Southwest has the second highest amount of cash in this group, and again, American Airlines is at the bottom of the barrel. So in summary, before I tell you which stock I would buy if I was forced to choose one, these airlines had one of the most intense rallies I have ever seen. So am I trying to say that this rally was unjustified? No, not at all. A lot of these stocks were trading well below 50% from their all-time highs, and the news about returning travel demand is certainly worthy of a rebound. But their profit margins or lack thereof, and their debt, and the uncertainty surrounding what will happen next with the Rona are a few of the reasons why I probably will not be going long on the airline industry. Not only are these airlines going to be paying hefty interest expense bills for years to come, but they're also probably going to take a very long time to get back to 80% capacity on every flight. And even at 80%, that's when they're just barely breaking even. What you have to understand, guys, is that the airline industry, although it is massive and there are thousands of planes in the air at any given time, they have very razor-thin profit margins, and it's hard to stay alive in this industry. So although I kind of just said it, as promised, here's the little grocery list, if you will, of what airlines have to do in order to get back to their all-time highs. They need the capacity of their flights to become well over 80%, meaning planes have to be more than 80% full for these guys to start making any sort of money again. Ticket prices have to come back to where they were. They have to keep paying off this debt despite working with razor-thin margins. And finally, they cannot have a second wave of the Rona. Otherwise, I think a bankruptcy is pretty much inevitable if it's not already. So again, in my personal opinion, and I'm not a professional, always do your own due diligence, but personally, I think too much has to go perfectly right in order for these companies to do well again, and too much has to go right for me to be able to sleep soundly at night knowing I own shares of one of these companies. But Matthew, you said you were going to tell us which one you would buy. You can probably tell already, but if I was forced to pick one of these stocks to hold for the long term, I would choose Southwest Airlines. Of these four major players, they have the lowest net debt, less than $1 billion worth, which is way less than the other three guys, and they also have the lowest break-even load factor. And these two things combined means that Southwest is probably the best equipped out of these four companies to withstand a prolonged period of low travel demand. So I'm not telling you to sell, I'm not telling you to buy, I'm not telling you to do anything. This is all my opinion, this is all my research. I just want to share it with you, so hopefully you can go and do your own research. But again, don't get lost in the sauce.
What?
If you found any value in this video at all, and I hope you did, please hit that like button, subscribe, and turn on those notifications. And wait, I've never done this before in a video, so let's see how this works. I want to put a few posts up here right now. These are daily posts from my Instagram account where I give updates on my positions, my portfolio, the books I'm reading, and mindset and motivation. So go check out the Instagram for more of those goodies. And as always, we'll end with the quote of the day. When we do fantasy, we must not lose sight of reality. That is from Walt Disney himself, and the reason I chose this quote is because this rally seemed like a dream. People made thousands and hundreds of thousands of dollars. But we must not lose sight of the reality, and the reality is that if you're a long-term investor, you will realize that the airline industry is very difficult to survive in. It always has been, even before the pandemic, and the pandemic has really just exacerbated or emphasized that fact. Additionally, guys, if you would like to send some support to protesters or the BLM movement, I've left some links in the description below for places where you can go and donate. Thank you so much for watching to this point in the video. You guys are the real MVPs, and eventually I've got to do something special at the very, very end of the video, and then I'll get to see who's watching till the end, because you guys, you're the best. With that being said, don't forget your peace and thank yous.